Hey, what's up, everybody? Felipe right here from Forex Scalping. I want to make this video analysis on gold. It's been a while since I don't make any video analysis. I apologize, but let's go right into our charts here. This is gold on the daily, and I want to show you guys everything you need to do in order to understand why the market is behaving the way it is. And I'm going to help you guys develop a sort of plan real quick. Okay, I'm going to talk about some of the things I personally do so that you can also start implementing them into your trading. Okay, so number one is I always like to go back to the bigger time frames such as daily and even weekly. Okay, so let's go in the weekly chart for a second because this is very important. Weekly chart, the number one thing I like to always identify are trend lines, support, and resistance areas. Okay, so initially I'm just going to draw this trend line that crosses this right about over here. And if you are having trouble identifying these trend lines within these candlestick charts, I recommend you go into line charts. Okay, so you're going to go here and you're going to put the line chart, and you want to pretty much connect the lowest points, the lower lows. Okay, so that's an interesting way of setting out actual, correct trend lines. Okay, you're gonna go back into your candlestick pattern, candlestick chart, and now you're gonna identify key resistance areas. So in this weekly chart, we see a pretty wide area of resistance all the way up over here. Okay, and so this is obviously a clear ascending triangle where you got the same resistance multiple times, but you have an uptrend line. Okay, so you have higher lows each time. So yes, on a very long term, gold might actually break out of this resistance and go back all the way up to find these higher resistance areas. But we don't care about that. We don't need to even think about that. We want all this initial area over here and possibly the breakout of this key weekly trend line. But why am I going and doing this? Because now I need to see what happened at this resistance, and if the bounce off of this resistance is only a correction or a pullback, or is it a clear rebound and it's a clear rejection and there's going to be a change in trend. Okay, I do want to say trend now, not just direction, because this could be a clear longer term trend. If we set out a channel over here, this might be an interesting trend for the next few months. So we can consider this an interesting change in trend. But is it, or is it just a pullback? So to do this, there are many ways we can identify this, but one of my favorite ones, and this is something I also do as a step two maybe, would be to identify candle patterns. So let's go into that resistance area and see what happened. Okay, so we've got a resistance right here. So we're going to set out these key points where the market bounced. So that's one, bounced over here two times and three times. All this is a one, two, three, pretty much four times that the market tried to break that resistance and it failed. And now we are bouncing off of that resistance again. Notice how it didn't really come all the way up to here where it did before towards 1365. It just bounced off at 1350. Okay, which by the way, it's a very, very psychological level for gold. Okay, multiples of fives, remember that. Anyway, so what happened at that resistance, and what are some of the signs that I need to look for? Number one, and most important, I want you to see what's going on here. Look at these two candles, okay? The number one candle I like, and you've seen this, is one of my favorite candlesticks. It's this inverted hammer. Okay, so this awesome inverted hammer has got an awesome body, a nice head, to that hammer, and it's got a very long wick at the top, which clearly means rejection. Okay, now what follows that inverted hammer candle is this even better bearish engulfing, huge bearish engulfing candle. Okay, so these two candlesticks are what, they're showing me a clear rejection on that resistance, but not just rejection. This bearish engulfing candle is showing me that it wants to make an interesting bounce off with strength, and it might just keep pushing. Okay, the reason why I say it might keep pushing is because for the next 2 weeks after this one, there wasn't really a big bullish candle that might have meant, like, okay, we found support, now we're gonna go back to retest this resistance. If these 2 weeks would have closed up over here, then that would have changed the game. That would have maybe said, okay, I'm gonna continue with what might have been a trend line over here, bounced here, made an interesting pullback again, bounced back off of that trend line, and maybe it would have gone up and retest this resistance to maybe make a double top or something like it over here. But that's not the case. What happened was a big bearish engulfing. Then here we got, yeah, we found rejection off of this support. Okay, so let's draw that support because we cannot ignore it right over here. Okay, the market did come down to here and retested this support even lower. Okay, but what I want you to understand, and the important of this, one of the most important things about these last 2 weeks before the one that's starting now, is the fact that they did not close above 50% retracement of this week. So if we take Fibonacci retracement tool and we just try to see the retracement of this bearish engulfing candle, the market retested level 50 and it bounced off of level 50 and it did not close above it. So if the market would have closed above 50%, then chances are it might have gone up a little bit to test 78 or even 100. Okay, so that's also an interesting sign that the market just didn't have strength to go up. Okay, and it found an interesting lower high. Okay, so now let's continue and analyze more things like that lower high. So we've got all these weeks of successful higher highs and lower and higher lows. But when the market over here made that higher low, it failed to make a higher high. It even failed to retest resistance. So this week had so much strength that these last 2 weeks were only correction weeks for that previous week. Okay, I hope I'm making myself clear. I hope you're understanding. I'm going as slow and clear as possible. So, understanding now this situation on the weekly chart, we can go back down to the daily chart and understand what's going on in the daily chart. And this is where I've posted some of my analysis starting on the daily chart. Notice again over here that interesting sort of inverted hammer followed by a nice bearish engulfing. As a matter of fact, we've got a 3 candlestick pattern over here. It's this bullish candle, inverted hammer, and bearish engulfing. This is called, if I'm not mistaken, a shooting star pattern, where you got a nice bull candle followed by a pin bar candle. You've heard this before, also as a pin bar or an inverted hammer, and that max point over here is called a shooting star. and it's completed when the bearish engulfing candle successfully closes, covering the previous bullish one. Okay, so in that case, this is a perfect example. And what that creates is a change in direction. Notice here the pullback and then the continuation. So another thing we can do over here, notice the support over here and how it became a resistance. Remember that was pretty much the 50% retracement of this push. That was the weekly candle. So this is the weekly candle. This is the last 2 weeks, and now we're starting that third week of that third weekly candle. And what you are also seeing is, look at this trend line. You're seeing the breakout, the retest to that trend line. Notice how perfect that is, and then followed by a bearish engulfing candle after it reached that trend line. So we've got rejection push off of that resistance, pull back to that trend line that it broke, and then we see that awesome bearish engulfing candle that is showing us that that was a nice pullback. Another thing we can see is that that's pretty much a bearish flag. Notice how there's a channel over here. We can set that channel. This is a corrective structure. So we got push, corrective structure, continuation. How do we measure that? The distance of that initial push should be, copy paste, the distance of the market after it bounces, after it breaks, I'm sorry. Oh yeah, no, never mind. After the pullback. So there it is. Push, correction to the trend line, continuation. And if you illustrate, if you draw a support, it's a key support area all the way over here with this resistance and this support. So this is also an interesting middle term to long term trade, which is the one I'm in, where I'm selling the head and shoulder pattern. So notice how we also see a head and shoulder. We got shoulder, left shoulder over here. We see the head over here and the right shoulder. Is this the left shoulder? It's not. Remember that the neckline has to be either a straight support, or in this case, it's nice and tilted, just like the textbook says. We need to have a neckline, an upslope neckline. So this is the actual neckline. We see an awesome left shoulder, a nice head over here, and that right shoulder that it ended up being higher than the left shoulder, but that's fine, it's perfect. And we should see that the distance from the neckline to the head is the distance in this case when it breaks the neckline. So from the neckline, that is the distance where we should see the market go. And that's where I personally have my take profit on this pair for the next few weeks. I plan on holding this, so I hope you guys are following me. To end this video and this video analysis, I'm going to go into the 4-hour, let's go into the 1-hour time frame, and I want you to see what happened. So I'm going to erase all of this, and what you have on the 1 hour is another head and shoulder, but this is a continuation head and shoulder pattern. So we've got that light bearish push, corrective structure. Notice here the left shoulder, head, right shoulder. We find the neckline again over here. This is the nice and awesome neckline. And we, again, I don't need to explain this. Head to neckline is what comes after neckline breakout. So that's about all the way here on these support. So this is an important support area. Okay, so make sure you secure some of your profits, or if you have more than one trade, you could close one and let the other one run. Or if you're just, intraday trader, you don't like to hold too long, you could close over here and wait for a nice liquidity or stop hunt or whatever you want to call it, back up to over here and then sell again. You can do multiple things. So this is the 1 hour time frame. Not much to talk about here, but there is something to talk about in the 15-minute time frame. Just to end this real quick, I want you to see an important keys area getting broken. So here we have the 15-minute time frame. We're going to zoom in right about here and notice something interesting. We have over here this support area, and over here I think I made an analysis with a trend line up right up somewhere around here, and I said if the market respects that trend line, if that trend line holds, we should see the breakout of it, the pullback to it, and then the continuation to that support area down over here, which is exactly what happened. The week actually failed to break it last week, but it held, I'm sorry. So market opened a few hours ago and it held. It did kind of break through this trend line, so we get rid of that. But what it failed to do was to retest these resistance areas at 1304, and it could have gone up to 1306, but it didn't. And what helped us identify that was this bearish engulfing candle over here. So notice how all these previous candles were small, they were indecision, and then out of nowhere, boom, a big candle. Whether that would have been bullish or bearish, that's a decision candle. So we need to eyes on it and see why and what's going on. So after that, we didn't even retest those resistance areas. We just kept going. So this was a nice sign that this all of this that happened toward the end of last week was indeed a rejection, and market just stopped over here. Notice also this interesting stop hunt, whether that was a financial trade or a bank or institution. So we've got a high over here, double top over here, a lot of sellers over here winning, and then that evil push up and down. That was a evil up and down. I call them really ups and downs. They're V shapes, ups and downs, or downs and ups, where people are getting stopped out and also entrapped. So what this candle did was it got a lot of bulls trapped after this pullback. People bought over here, they were happy up here. A lot of short sellers got stopped out over here, and then the buyers had to get stopped. So if you bought at this resistance, so here we got the resistance, right? We got the breakout of it. Where are you going to buy? You're buying at the pullback. So you bought here. Where are you putting your stop loss? Where some conservative traders are putting them down over here. They want to give all this margin of error, but a few put it over within this range, and they definitely got stopped out. And if they put it down over here, they just got stopped out a few minutes ago. So I hope you understood everything I tried to explain. I hope I made myself clear also. And notice how we talked about different time frames from the weekly to the 15-minute to understand each and every movement and identify if each movement is either a correction or an impulse or a continuation. Okay, so what can you do if you are not in this trade? Don't sell now, because a lot of people are selling with emotions. There might be an interesting push up over here to the support, previous broken support, now resistance. So I would set some sell limit orders at 130 or 1301, even 1302, but I doubt it. I think it might just test 1301.30-ish, somewhere around this previous support. You can risk and sell now, but know for a fact that you might be in a drawdown. So don't get emotional, don't hesitate, wait for a nice setup. And if you fail to get this initial push down, then you just wait. You go to your 1-day time frame and you wait for that neckline to get broken out of. So this neckline over here, you can wait for that to get broken. Even the 4 hours. So never mind, that's too long to wait. Let's wait. Let's go to let's see, 1 hour. Yeah, so this is the one I'm talking about. So once this trend line gets broken, then you can it'll be safe to sell. also this support. So once the market decides what it's going to do um, within this area, then you can maybe sell. So something like this, probably this is what we might see. So this is option A. Okay, and then the option that I'm talking about is this one. Hold on. So this is the other option I'm telling you. So once market breaks this support and trend line, you want to enter on a sell right there, okay, to get this push. All right. Anyway, I'm going to stop right here. This was a 20-minute video, not too long, awesome to understand, very complete analysis on gold and your pretty much your weekly plan on gold, okay? So make sure you take advantage of it, and best of luck. Contact me if you need anything. My email and all my information is on the description of this video. If you are in my Discord channel, you can message me privately or within the chat rooms. If you're not in my Discord channel, you can search it on the description of this video as well.